This morning, January 24th, 2026, silver crossed $103.48 per ounce. And while amateur investors are celebrating, popping champagne, posting rocket emojis, the smart money is heading for the exits, quietly, desperately, because they understand a terrifying truth. A 3-digit silver price was never supposed to happen. It is a mathematical impossibility in a stable financial system. This isn't a bull market. This is a system failure alarm, a blaring red light signaling that the entire machine is about to seize. The crash isn't coming. It's already started. And this price is your final warning. In this video, I'm not going to tell you what you want to hear. I'm going to tell you the truth you need to know. First, we're going to deconstruct this 103 price, and I'll show you why it's not the result of normal supply and demand. It's the signal of a massive crack in the foundation, a COMEX default. Second, we'll understand what system breaking actually means. This isn't just about the stock market. This is about the bond market, the currency market, and the collapse of trust itself. And third, the cliffhanger. I'm going to tell you what crash ahead means and reveal the one thing you must do this week before banks shut their doors. Because what's coming isn't a correction. It's a total system reset. And you have days, maybe hours to prepare. Let me show you why. So where did this $103 number come from? To understand that, you need to understand the lie of paper silver versus physical silver. 99% of silver traded in the world is paper. COMEX futures contracts, SLV ETF shares, unallocated bank accounts. These are just promises, digital entries on a screen. For every single ounce of physical silver that actually exists, there are 200 to 300 paper ounces traded. For 50 years, the system worked because nobody ever demanded physical delivery all at once. People were content to trade paper promises back and forth. Until last month. In December 2025, something changed. Industrial users, Tesla, Apple, Samsung, started demanding physical delivery instead of rolling their futures contracts forward. And sovereign buyers, the Pentagon, the Strategic Silver Reserve Program, started pulling metal out of vaults in massive quantities. COMEX didn't have the physical silver to deliver. On January 14th, 2026, a major hedge fund filed for delivery of 20 million ounces. That's 4,000 contracts. COMEX delayed. On January 17th, they issued a notice. Physical delivery suspended due to operational constraints. Cash settlement offered at market equivalent. In plain English, we don't have your silver. Here's cash instead. That was a default. A quiet, technical, legal default, but a default nonetheless. And the moment COMEX defaulted, the entire paper-silver market became worthless. Because if the exchange can't deliver, what are those futures contracts worth? Nothing. So traders abandoned paper and started chasing physical metal. And physical metal is controlled by a handful of dealers, miners, and sovereign entities who have zero incentive to sell at $30, $50, or even $80 per ounce. Why would they? There's a shortage. They have the power. They set the price. $103 isn't a market price. It's a scarcity price. The price that emerges when paper promises collapse and only physical reality matters. This is the first crack, the biggest crack. And it's spreading. So to recap, $103 exists because COMEX defaulted and the paper market died. But that's just one domino. Let me show you the others that are falling right now. When we say the system is breaking, what does that actually mean? It's not just the S&P 500 dropping 10%. It's not just silver spiking. It's the three foundational pillars of the financial system collapsing simultaneously. Pillar number one, the bond market is freezing. The U.S. Treasury bond market is $27 trillion in size. It's the most important, most liquid market in the world. It's the foundation of global finance, and it's seizing up. Why? Because after watching COMEX default on silver contracts, international investors are asking a terrifying question. If COMEX can't deliver silver, can the U.S. government deliver on its debt obligations? China holds $850 billion in U.S. treasuries. Japan holds $1.1 trillion, and both countries are now quietly selling. On January 20th, 2026, the 10-year Treasury yield was 4.87%. Today, January 24th, it's 5.64%. That's a 77 basis point spike in 4 days. In bond markets, that's catastrophic. Rising yields mean falling bond prices. Investors are dumping U.S. government debt. And when the bond market freezes, the entire economy stops because everything is priced off treasuries, mortgages, corporate bonds, auto loans, credit cards. When Treasury yields spike, all borrowing costs explode. Companies can't refinance debt, banks can't lend, the credit system locks up. Pillar number two, the currency market is in panic. $100 silver means the dollar's purchasing power is collapsing. Think about it. In 2020, silver was $12 per ounce. Today it's $103. That's an 858% increase in 6 years. That's not silver going up. That's the dollar going down, dying. losing the trust that's kept it as the world's reserve currency for 80 years. The US dollar index, DXY, which measures the dollar against a basket of major currencies, has crashed 14% in the last 3 weeks. Investors are fleeing dollars and running to tangible assets: gold, silver, commodities, real estate, anything that can't be printed into oblivion. And when a reserve currency collapses, it doesn't happen slowly. It happens in a sudden, violent panic. Pillar number 3, the trust is gone. This is the most important pillar, and it's already broken. Trust that COMEX won't lie to you. Gone. Trust that banks will give you your money when you ask for it. Evaporating. Trust that the dollar will buy the same amount of goods tomorrow that it buys today. Destroyed. Once trust is gone, the system can't function. It doesn't matter how much money the Fed prints. It doesn't matter what government officials say in press conferences. When people don't trust the system, they abandon it. And that's happening right now. So we've covered the 3 pillars: bonds freezing, currency collapsing, trust evaporating. Now let me show you the exact timeline of how the crash will unfold. So what does crash ahead actually look like? How does this play out? It won't be a single day. It will be 3 distinct stages over the next few weeks. Stage 1, the liquidity freeze, next 7 days. Banks operate on trust and liquidity. They borrow short-term money to lend long-term. It's called fractional reserve banking. But when the bond market freezes, banks can't borrow anymore. Because other banks don't trust they'll get paid back. We're already seeing this. On January 22nd, the LIBOR-OIS spread, a measure of stress in interbank lending, spiked to 87 basis points. That's the highest since the 2008 financial crisis. Translation: banks are refusing to lend to each other. In the next 7 days, you'll start seeing signs. ATMs running out of cash. Daily withdrawal limits imposed, $500 or $1,000 max. Technical difficulties: when you try to transfer large amounts, banks claiming unusual activity and freezing accounts for verification. This is the liquidity freeze, and it's the first stage. Stage 2, the market plunge, week 2-3. Without credit, companies can't operate. They can't make payroll. They can't pay suppliers. They can't refinance maturing debt, so they start cutting. Mass layoffs, bankruptcy filings, production shutdowns. The stock market, which has ignored all the warning signs so far, finally wakes up. And when it wakes up, it plunges. I'm predicting a 35% to 45% crash in the S&P 500 over a 2-week period. Worse than 2008. Worse than 2020. But here's the difference. In 2008, governments bailed out the banks. In 2020, they printed $5 trillion, handed it out. This time they can't. Because the government itself is bankrupt. The bond market won't fund new bailouts. And printing more money will only accelerate the dollar's collapse. So there will be no rescue. Companies will fail, banks will fail, and the public will panic. Stage 3, the bank holiday. When the panic reaches its peak, when people rush to banks to withdraw their savings, the government will have one option left. On a Friday evening after markets close, the president will appear on national television. My fellow Americans, to preserve the stability of our financial system, I'm declaring a 72-hour national bank holiday. All banks will be closed. All ATMs will be offline. All digital payment systems will be suspended. This is a temporary measure to prevent a systemic collapse. You'll wake up Saturday morning. Banks closed. ATMs out of service. Credit cards declined. Venmo frozen. Zelle suspended. You won't have access to your money. And when the banks reopen 72 hours later, if they reopen, the money in your account won't be the same. I'll explain what happens in the final section. But first, let me show you the lie they're going to tell you. We've covered the 3 stages: liquidity freeze, market plunge, bank holiday. Now let me expose the official narrative they're preparing to sell you. Right now, as I record this, officials are preparing their talking points. Tomorrow, or the next day, the Federal Reserve Chairman will hold a press conference. He'll stand at a podium with the Fed seal behind him. He'll adjust his glasses, and he'll say, "The Federal Reserve is closely monitoring market conditions. We are providing ample liquidity to ensure smooth functioning of financial markets. The banking system remains strong, well-capitalized, and resilient. Today's volatility is driven by speculative positioning, not fundamental weakness." The Treasury Secretary will appear on CNBC. She'll smile reassuringly and say, "The full faith and credit of the United States government is unquestionable. We will meet all our obligations. The dollar's position as the world's reserve currency is secure." They will lie, confidently, professionally, the same way they always do. Do you remember September 10th, 2008? 2 days before Lehman Brothers collapsed and triggered the global financial crisis? Lehman's CEO held an earnings call. He said, "The firm is strong. Our capital position is stable. We have ample liquidity." 48 hours later, Lehman filed for the largest bankruptcy in history. Or remember March 2020? The Fed chairman said, The U.S. economy is in a good place. The fundamentals are strong. 2 weeks later, the stock market crashed 35% and the economy shut down. They always lie until the last possible moment. Because their job isn't to tell you the truth. Their job is to prevent panic for as long as possible. So don't listen to their words. Watch the signals. And $103 silver is the loudest signal in financial history. We've exposed the official lies. Now let me tell you what actually happens after the bank holiday and the one action you must take immediately. So what happens when the banks reopen after the 72-hour holiday? They'll announce something called a bail-in. This already happened in Cyprus in 2013. The government declared that banks were insolvent. Instead of taxpayers bailing them out, depositors were forced to bail them in. The banks took 47.5% of all deposits, over $100,000. If you had $200,000 in your account on Friday, you had $105,000 on Monday. They confiscated the rest. It was legal. It was called emergency financial stabilization, and depositors had zero recourse. That's what's coming to the United States. When banks reopen, they'll announce, to preserve solvency and meet regulatory requirements, all accounts over $10,000 will be subject to a 20% stabilization levy. Your $50,000 becomes $40,000. Your $100,000 becomes $80,000. Overnight. Legally. Permanently. This is the final stage of the Great Reset. The destruction of private wealth to force acceptance of central bank digital currency. Because after they steal 20% of your savings, they'll offer you a deal. Transfer your remaining funds to the new FedCoin digital wallet and receive a 10% recovery bonus. But you must do so within 30 days or forfeit access entirely. They'll make you choose between losing everything or joining their CBDC system. And most people, desperate and scared, will accept. But there's one action you can take right now to avoid this trap. Withdraw a significant portion of your cash from the bank. Today, not from an ATM. Go inside the bank. Request a withdrawal of $5,000, $10,000, whatever amount you need to survive for 30 to 60 days. They might ask questions. They might say it's unusual. They might try to talk you out of it. Withdraw it anyway, because when the bank holiday is announced, when the doors close, when the ATMs go dark, cash will be king. You'll be able to buy food, water, medicine, fuel, while everyone else is locked out of their frozen accounts. This is your last chance to get liquid before the system locks down. Do it today. Do it tomorrow at the latest, because once the freeze begins, it's too late. $103 silver is not a victory. It's a siren, a warning that the ship is sinking, that the iceberg has already torn a hole in the hull, and that it's time to get to the lifeboats. Most people won't listen. They'll stay on the ship, drinking champagne, celebrating their paper gains, convinced that everything will be fine. And they'll drown when the ship goes under. But you don't have to be one of them. You've been warned. You've been shown the timeline. You've been given the action to take. Now it's your choice. What do you think? Will the crash happen this week or next month? Have you already withdrawn cash from your bank? Or are you still hoping this all blows over? Drop your answer in the comments. Share your survival strategy so others can learn. And if you want to know the 3 assets that will not only survive this crash, but potentially deliver 100x returns when the system rebuilds, subscribe to this channel. Because my next video reveals the Phoenix assets, the investments that rise from the ashes when everything else burns. The game has changed. The rules are different now, and only those who see it coming will survive. Stay safe, be prepared, get cash, get physical assets, get out of the system before the system gets you. The crash is here, your move.